executed. Suppose there are 1 lakh pending orders. 1 lakh is the total orders that he punched, but out of this only suppose 30,000 or 40,000 got triggered. So what happens that price expands from this place? It means there are more orders. Now it's a probability that there are more orders pending because price swiftly went from this place. So whenever in future price returns to this area, these pending, suppose 70,000 or any number of orders that are pending, they get executed and price again goes up. So this is the concept of demand, how demand works.
When you feel low, you can still go. Even when you feel slow, you can still go.
So today we will basically see what is demand and supply, and then we will see how we can do swing trading based on them. So as you see in this picture, this is a seesaw, and you see on one side there is demand and on the other side there is supply. So suppose this demand is more, what will happen? This price will go up, but suppose supply is more, the price will fall more. Now suppose both are equal, this will not move. So if the price is going up, you see price going up, it means demand is exceeding the supply. And when you see price is falling, then in short, supply is more than demand. So basically there are two types of investors in stock market. One are the big institutes and second is the retail investors. So we all fall in the category of retail investors. Now when suppose a big institute wants to drive the stock market and he wants he's started investing in some stock, and suppose the current price is around 3,000, and now the goal of that investor is that he wants to make profit. So ultimately he sees, now suppose the current price is 3,000 and now he wants to make the price 6,000. So around 100% return he wants. So he cannot just keep on buying at 3,000, because if he starts buying, the price will directly reach to 4,000, 5,000 in a single go. So what he what is the what is the step he follows? He kinds of do the limit order, in which suppose he wants to buy 1 lakh quantities of a stock, he will buy that as a limit order. So once he buys that in a limit order, many times when you put a limit order, if price is in that range, then only the order gets triggered. So it means there will be still pending orders in that zone. Let me show what I'm saying. Now suppose this is the price is falling, and at this point the big institute steps in and he wants to invest now in the stock. So now he puts a limit order in this zone. So once this zone now order gets punched, the price starts to move again. Now price is already moving ahead of this zone and all the orders are not executed. Suppose there are 1 lakh pending orders. 1 lakh is the total orders that he punched, but out of this only suppose 30,000 or 40,000 got triggered. So what happens that price expands from this place? It means there are more orders. Now it's a probability that there are more orders pending because price swiftly went from this place. So whenever in future price returns to this area, these pending, suppose 70,000 or any number of orders that are pending, they get executed and price again goes up. So this is the concept of demand, how demand works. So now coming to the same point. Basically now how to mark these demand zones. So basically demand zones are of two types: DBR, that is a drop based rally, and RBR, that is a rally based rally. So what is DBR? Suppose drop, the D stands for drop. So price has to drop. This is the D, the DBR, this is the D, the drop. So from certain level, the price is dropping and you are getting a negative candle. Now base candle, the base candle, the rule is that this base candle at the bottom, the body of this base candle should be less than the 50% of the wick. So suppose this is the candle. Basically, the doji, it should be a doji candle. This body should be less than the total. So the main body should be less than the total percentage of this whole area. So suppose you see this candle, all these small candles, they form the base candle. So in now we have to define DBR. So in DBR, D is the drop, B is the base, and R is the rally. So there will be a drop first, then a small candle at the bottom, and then you will see a rally. So this is DBR, where there is a drop, then there is a small base candle, and then there is a rally. So basically, this is the zone of that base candle is the demand zone. So normally, how to mark this demand zone? So you can see that this is the drop, this is the base, and then there is a rally. Now, as I said, the drop candle and the rally candle, that is a big candles, their candlestick must be greater than the 70% of total, including the wick. So there should be strong big candles, and base candle, this the body to wick ratio less than 50%. So it's, I mean, like a doji candles. And so now demand zone, how to mark these demand zones? There are two rules. Either you can cover the whole area, whole this base candle, or if you want to, I mean, the stop loss for this is the bottom of this base candle. So if you want to reduce the stop loss, you can cover the, from this you can take. So it depends on what is the stop loss for you, but this whole is the demand. Actually, this zone is the demand zone, the whole base candle. So this is DBR. Now the second type of this is RBR, in which this was the case of DBR. Now suppose the price is already in a demand. This was the drop, this is the zone, and this was a rally. Now suppose after this rally, it takes some pause, and in this pause we again get some base candles, because it cannot go in one attempt to this area. Suppose it has to travel to this area, it will again create a demand zone. Now since there is already a rally associated with it, and so it means the rally, RBR is rally, base, and again rally. Now understand by terminologies here, DBR is drop, then base, then rally, and RBR is rally, base, and again rally. Like I said, there is a rally, again a base candle is there, and again a rally. So price, whenever if it again retraces to this level, we will see a new rally. So let us take let us take some examples. So before that, let me give one feedback. I mean, we had recently conducted webinar on this part 3 of this corrective patterns, in which we had discussed about DMART. So actually DMART, let me. So DMART, actually, when someone asked me whether it is a right time to invest, it was at around 4,400, 4,500. And I said, now it's not the right time, and you should look for a demand zone. The nearest demand zone at that time was at this point. As I said, these small candles you can see, these are the base candles. And now if you mark these candles, you can see from this demand zone, price reacted, and again it is to 4,600 levels. So these demand zones were around from 3,300 to this. Now see how a feather touch, just a touch to this area, and prices again reversed it. So this is actually, what is this? This is rally, and then drop, I mean the base and rally. So this is an RBR example. There is a rally, there is a base candles, and there is again a rally. So this is the RBR case, and the demand is very strong because you can see back to back we get 1, 2, 3, 4, 5, 6. So 5 to 6 back to back candles from this zone. So this is a very strong zone, and you can see in this video I had I mean I had also actually given the pattern, what sort of pattern you should be looking, and it was nothing but the inverse head and shoulders pattern. This was just the formation of the pattern, and now you can see the same pattern actually formed at this level. So if you see, this pattern was not even complete at that moment, and now I also had suggested that now the price will form a corrective structure and then it will again give breakout. See, same thing happened from this point. It again fell to this and gave a breakout. So what was the rationale behind this call? That because price is reacting from a very strong demand zone. So now whenever you have to buy, you have to look for a demand zone. It can be an RBR or it can be a drop based rally. And then what you have to do, you have to, from this demand, so suppose this is a monthly demand zone. Now from this demand zone you have to go to smaller time interval like daily, and you have to look for some bullish pattern. Like in this case, if this is a inverse head and shoulders pattern, or it can be a simple trend line breakout also. So I mean, for swing trading we will take this case, and because price is coming from a demand zone. And how to book? Now suppose I go to monthly, I again see this supply here. So now first I will observe the price, because it may happen that this will break it, and it may happen that it can reverse. So I can trail as per the strategy I have already teaching earlier. We can trail the stop loss when it is moving from this point to this point. It can be just a trend line, and then you can see if price reacts from this zone, then you should be out from this trade. Or it can happen that after reaction it again crosses this. So you have to observe and not in uh, you have to see the price how it forms, because it can go up also, it can fall also. If it is falling, you are out of this trade because now price will reverse again. But if it goes up and up, then you have to be in the trade. You don't have to add before the trade. You don't have to think like this will happen or this will happen. You have to see that on the basis of what price does. Because supply, suppose if this is a supply zone, let the price react from this zone and then trade. Now basically basically how demand and supply traders trade, they take blind trades, because this is a supply, this will come down, and this is how a demand and supply trader will trade. But the strategy which I am teaching you is that you have to wait for the reaction from this zone, and then suppose from this you get a pattern like head and shoulders, or and then you can enter this short side also, because our entry in this was a bullish pattern like this, right? We didn't blindly trade on demand, and we traded once this happened. So we have to see, we have to the price has to prove that this is a demand. At this point we can confirm no price is moving up because this is a bullish pattern, and we trade. And similarly, if supply tells us that this supply is strong, so price will fall more, and from this level we can either book the profit or we can take the short side also. Now let us see another case of ITC. See in during COVID, ITC had actually let me remove this. This is during COVID. In the June month, ITC had fallen to around 130 levels, and you can see to the left there is a demand zone. This is nothing but RBR, rally base rally. And if you just draw this demand zone here, See how to draw this demand zone. You have to just consider the base candle here. These two are the base candle, and just move that base candle to the right side. You see just a feather touch, and now where was the supply? See, there is a supply there. Let me mark that supply also. And now this is a quarterly chart. So if we move to weekly chart and see our see, this was a point where we had to initially see for a reversal. And let me now erase everything. You can see price actually reacting from this zone, but it didn't break the previous low. So if it had to fall down, this will actually take out this area, because this was a trailing stop loss for this, but it didn't break this, and it again went and cleared this supply again. So that is what I was talking, that you don't have to react from every zone. Let the zone prove that this is strong, and if this was hit, then we should, I mean, now because for long term investment we cannot check each and every zone. It has reacted, but the stop loss was not hit, and we can trail from now see from 130 levels the price is over 300, and that has happened within 2 years, so almost tripled within 2 years. And this is the power of demand and supply zones, that just a feather touch. For long term investment, always look for these sort of retracements, and these retracements, now you can follow, this is a monthly, quarterly chart. You can follow these concepts for a daily and I mean hourly also. uh, but the stronger zones are the higher time interval zones. Now see Nifty also, let me show for Nifty also. See, in the COVID, Nifty fell to which zone? 6600, right? But you can see now I go to the yearly chart. See, exactly Nifty has reacted from this zone. So you see how powerful this can be now. How powerful this a concept can be, that now many people were actually not, there was a lot of panic in COVID times also, but see, and the demand zones actually work during COVID also. There was this zone also, but this was already tested. So now let us come to the second point, that this is a fresh zone because the price never came back to this area, and we should always look for fresh zones. Because what happens, suppose like I explained in the earlier concept, now suppose 50,000 orders were pending. Now next time these orders will get executed, and it may not happen that whenever price again comes to zone, all the orders are executed already, so there will be no buying from this zone now, and it will go past this. So we always take high probability trades. That is the first time only. Second time also it can react, but we mostly suggest to buy on the first attempt only. So is there any doubt till now? Any questions? How many people are there? There are 8 participants. Any question?
This concept was quite clear. So I just wanted to ask, जब first breakout आता है, so we need to wait for the retest to enter, right? So first retest जब होगा, then we can enter. So not wait for the second retest. This means the same, right?
See, I mean, I didn't tell you to enter when it retraces. Like I explained the DMART chart.
Demand zone, definitely we'll search for the demand zone only. So if we want to enter,
No, but you have to see that this is a demand zone, because just the candlestick, like this is a base candle, doesn't mean actually this is a demand zone. It looks like a demand zone to us, right? But
it can be a supply zone.
No, I'm not asking about this. This is definitely a demand zone as per rules. But how can you actually know that there are pending orders here? Because many times for similar chart, you will see something like this.
Yes.
You can check hundreds of charts. Many times it will do like this, and sometimes it will do like this also. Because what this supply may be stronger than this demand, and it will go directly like this. Let me erase this. And during COVID, let us see that. See, this is a demand zone, right? This is a demand zone, but this does not give any moment, right? This fell. So how to verify that this is a demand zone? Now many times there are rules like you back to back. If there are back to back two big green candles and this is a strong zone, agreed to this point. But the strategy which I am teaching here is that you have to let the price prove that this is a strong zone. So once price reaches this zone, you have to look for something like a trend line breakout, or you have to look for a bullish pattern. So this is a bullish pattern, right?
Yes.
There is a trend line breakout here, and you can now confirm that this demand is actually strong, and as per this pattern we get the target. There is some target, right? So we plan for that target, and in between, now I also I see that this is a supply zone. Okay, so I'm also waiting on a lower time interval. I'm also waiting whether this supply is strong or not. So I have to be always watchful, because I cannot say now I'm invested and I don't want to monitor this, because it can happen in a single day like this also. So you have to be always, monitoring your investments, that now price is near to a supply zone. So will there be reversal or not? Or if you are content with this up move, you can book partially and then wait for this to be taken out. If this is taken out, then there is a fresh buy trade, and you can like this continue with your investment, or you can see how, where to book, where to exit, and how to move forward. So it's not like you have now, it's not that you just mark the demand zone and your role is over. You have to see if price has reacted from this zone or not.
I think in Tata, like, see, it has reached to the supply zone.
So on which time interval you are seeing that it has reached a supply zone?
So weekly, you can check.
Supply zone is this 10,000.
Yeah, right.
So it has not reached the supply zone, right?
Supply zone से वो नीचे आ गया है ना, so
see, supply zone is, you see this is a supply zone. Now price,
right.
if price reaches this, then you are looking for a short trade. But price is actually near to this demand zone, right? It is going to in the demand area. But this is now as per monthly, if you are planning an investment, this is not a demand zone, right? And this is also not a demand zone, because this is already reacting. So a strong demand zone is near to 4,000 level, 44343. So now whenever someone now asks where to invest, this is the level for me. And not
so
just
what about the actual, if we are holding it, so we should do a partial booking, like you said in the earlier slide.
Let me come to that point before this point. So now suppose price also reaches this, you cannot blindly enter, because that means you are praying that price reacts from this zone. So you have to follow some strategy, that from this zone also, if it is reacting, what is the target? Because target only comes when you have some bullish patterns, like I have explained in the earlier videos. There are some patterns you give. So these patterns give you the exact target. So that's how you enter on signs, not from what you think. You think that now you think like this is demand zone and price will react, so I blindly buy at this. And now see what is the drawback of this. There is a chance it does not react, and you are already, suppose you are averaging, you are averaging here and you are already in loss. Now you are averaging here also and it breaks. So it means you are in more loss. So first,
More loss, yes.
first thing is never average in a losing trade. Now, unless and until you are getting a new bullish sign, then you can average it. But the first standard that says never average a losing trade. But most of the people here are actually, I mean, losses in some trade. So we have to design some strategy in which we can again average. But blindly we cannot average at every point. Now coming to the other point, that what for the existing investors and all those things. So first point to you that why you didn't book. I mean, see, whenever you see this is a demand zone, whenever you see a demand zone getting breached, so it is the first sign that price will reverse. So we cannot actually now predict for the existing, existing investment. You are in already a loss. So now you have to either look for another bullish sign. So let us see where are we getting bullish. So at as per weekly, this is the zone. 8,000 is a zone. So this should be the final. Now as per weekly, it is still not in downtrend because if you draw this trend line, it is just coming back to this trend line.
Right.
So if you see any bullish pattern at this trend line,
then enter.
and up to which point it can go, this supply zone. Understood this point?
Yeah.
So let us see if there is any divergence here. So there is a divergence actually here. So you should be now see, and these points I have already, whenever there is a divergence, there most probably it will fall more. There is a divergence here. Now suppose I get the crossover also here. It is going for a big
down.
It is going for a bigger fall. Is this point understood?
Correct.
So
Yes,
so whenever you are in any investment and you see price again making a new swing high, always check whether there is any sign of divergence. See, divergence at this point, there can be divergence, but it can keep on going higher and it can even cross this. But in this case, now see, you see momentum is not strong.
Yes.
And it started to fall also. Now only way it will go up, suppose it again goes up and there is another like this, so now then you will be good. But
right,
suppose it breaks this area also, then you should definitely exit, because what will happen, it will go up also from this area, because we know that after first fall it goes up for the correction, but then in the end,
right,
after few months it will again fall.
okay,
So now if you are late, it depends now whether you want to book the loss here, or wait for any new opportunity, or you have to because now you are too late. Where was the entry?
it's quite early, so I will have to book the profit.
Yeah, then that you should always, even if you have to book the profit, you have already missed on some, right? So
right,
like
exactly.
this, basically you have to learn now, if you are in the profit, how to preserve this profit. So like the concept of previous higher high. So this is a point of that. Now if you draw trend line, price is also breaking this zone.
Yes.
So this is the actually trailing stop loss for this.
Right. Got it.
So there are around very few minutes left. Any doubt? because other participants are actually not participating at all, and they keep on sending me messages, and I get the same messages like that I am invested in this stock, what should I do? So these sessions are for that you should decide on that where was the mistake. Like I said, that if you see divergence and trend line breakout, all this, so you have to book and wait for further bullish signs. But people still not want to learn, and they are still, I am invested in this. And now I also get the questions like, where is the reversal? Because all these what I am talking is a reversal. The bullish pattern is actually the reversal, but I still get the question, how to find reversal if price is down. So if price is down, it now, and you get another bullish pattern, you have to look for bullish pattern. Now this is the reversal.
Right.
But people do, they I mean invest in this area because there is no stoppage to this. It can come like this, go up again, up again, down. So you cannot always start averaging here. You have to wait. There should be an end, and end will come after it goes like this. So any other questions? There are 9 participants. Anyone?
I will
Can we
share
have
you
one more example?
Example of what?
So any other chart?
Okay, let me know which chart you want me to take.
So anything like SBI or anything?
Which time frame?
Sir, weekly. Like we can get some more clear.
Now, suppose anyone wants to invest in SBI. So best point will be this point, because this is a demand zone. As I see this is big candle from this zone, and this is the demand zone, because these are small base candles. And so anyone wants to invest, if there is a crash in this will be the area to invest. And now at this moment, you see this is very in a range. There is actually no demand zone here. So if it has to reach a demand zone, where will be the first point? This is actually already tested, so you have to wait for this zone. SBI actually is in a range, and there is not a well-defined demand zone here. So you understood the demand zone and supply zone, right? So demand zone, you have to see price going up from a particular, but all these is a range bound zones. So you have to, there's a difference. Demand zone means, suppose this is a demand zone, from this price should fly. But see, the price in SBI, it is in a range here, right? In a range. So powerful demand zone means where price will fly. So I don't see any demand, zone here, which is price is flying, but it is a range only. So all these are not valid entries for SBI. So it has to, you have to look for a chart in which there are more strong upward zone. Let us, so on this, like this. So you see a strong upward movement here. So on this, you have to analyze the demand zone. Now see these areas. So these all are the zones. So anytime price moves to here, or you have to find for big rallies. Now let us go to a smaller time interval to understand this. Now see this zone. There is a small base candle, back to back 2 green candles. So if you see price coming to this, and this is a 1 hour chart, and suppose on a 15 minutes you get a bullish pattern here. So that is your entry here. Understood?
Yes, sir.
So you understood how to draw demand zone, or there is doubt in that?
Hello.
Hello?
Yeah, actually, I have one query. I
Yeah.
also opened the same trading view for SBI, but I don't see those blank blank bars. I only see red and green.
So
Is there any
actually,
setting I need to do?
yeah, actually I have used one indicator less than 50% body candle.
Uh-huh.
So if you, I mean, use that, then you will be able to see, now these automatically, these candles will be marked for you.
Okay.
So actually this is the first video. Now actually demand and supplies, this is the same way supply will be marked, but you have to practice and wait. I mean, whatever is taught today, this is actually the entire summary of demand zones, but you have to now see on charts how this will work, like in ITC. This was the demand zone, right? On the after that you saw a big up move in this. Now if you, on the monthly chart also, if you draw this trend line, there was a trend line breakout here, right? So if you have entered here, you still have got a lot of money in this.
Yeah.
So
But
all the, yeah,
for the new investment, we can't wait till it reaches the demand, right? It may not reach in the few months or
see,
few years.
same question was actually asked to me for DMart, and people were not agreeing that demand will reduce from 4,500 to 3,000, because if you see any chart, there will be, it cannot go in one way, and if it is not coming, then that is not the right stock for you, because people at this moment also, they were saying that DMart cannot come 50% from the top, and in this case also you can see it retraced back 50%. Now let me show you again, from this rally to this rally, it again retraced back to 50%. So, and a fall to 50% or even 61.8% is very common for any stock, be it DMart or Reliance or anyone. But people are not accepting this, that it can fall. It can be any, suppose it's not falling, right? Then that is not the right stock for you. Check